Welcome back to the place to be with the CBDC Asset Group. Thank you for being a part of the group. This video is dedicated to people who might be new to investing to give you a general outlook and overall strategy on long-term versus short-term investment. In the Earn Your Leisure podcast, Ryan Leslie and Hill Harper talk about mentorship and long-term investment strategy. Don't forget to like and subscribe. Hit the bell for the notifications. I'll see you on the next one.
And they're taking it out. You left it in, and now you're up 16,000. You're up 16,000% on your initial investment. So talk about that.
Yeah, for sure. To be a great long-term investor, it really just comes down to three elements. The first and the second you control. The third is up to the market and the economy. The first is just time. When do you start and how long do you hold? For me, my holding time horizon is always 20 years. And the reason why my time horizon is 20 years is because when you look at the history, anytime you've held, if we talk about the S&P 500 or we talk about the total stock market index, anytime you've held for 20 years, you've had a 0% chance of loss. A 0% chance of loss. I know a lot of people who are new to investing. I know for sure my parents, they're from the Caribbean. They thought being in the stock market is just gambling. They see people actually do exactly what we were just talking about, that rotation where you just leave too much of that money on the table. You see it do one somersault or two somersaults. You've never seen your money dance like that. Then you take it out. But 20 years is the time horizon. Number two is the rate of savings. And number three is the rate of return. When I make an investment, I want to be an owner. And ownership is not about a short-term play. Just think if you actually bought a franchise and you put somebody in that franchise and on day one, they were selling, let's say, 20 hamburgers. Then in 2 years, they were selling 300 hamburgers. Why would you sell the franchise if it's actually delivering for you? So what I will say is that the reason I held, though, had to do with mentorship. I watched my investment go from 100,000 to 350,000. And I remember a conversation I had with my mentor. I said, hey, look, man, I took your advice and man, 100,000 to 350. I'm gonna cash out, get something nice for my mom. And he gave me an ultimatum at that time. He said, Ryan, listen, you can go ahead and cash out, give something nice to your mom, but we'll shake hands and I'll never teach you anything again. Or you figure out a different way to give something nice to your mom and hold on to that investment. And we'll check in every single year around tax time and we'll see what it grows to. And when we checked in this year, that 100,000, I got it on my birthday, September 25th, 2009. That 100,000 was just under 16 million. But that's the difference that mentorship makes. Because for me, if it was up to me, I look in the mirror, I'm thinking, man, I'm smart. I made a great investment. It's giving me a great return. And sometimes the lens of expertise and the lens of experience can actually provide you wings that allow you to fly further than you can fly on your own. And so that's why I think, first and foremost, when I look at a company, I want to be in a company that when I look around, I use it every day, and the people I love, they can't live without it. So when I'm looking at Instagram, I want to be an owner in Facebook. When I'm looking at devices that I'm seeing all around, I want to be an owner in that company. When I'm seeing the platform that I'm able to even listen to podcasts on, I want to be an owner. And you got to give the business time to materialize into the growth that you're looking for, because you want your money to work for you. And I say this, like, honestly, when you think about it, man, think about the companies that have done extremely well. They've always done well over a 20 to 30 year time horizon. And I want you to think, if you got into Amazon when it first IPO'd, when you got into Monster Energy when it first IPO'd, if you would have sold at 1,000%, I'm talking about 10x your money, you would have left tens of thousands of percent on the table. And the beautiful piece about money is when you put it to work for you, it's one of the greatest employees because it never has a sick day. It never goes on vacation. It never asks for time off. It never gets old. It never gets weak. It's always there to keep working for you unless you actually go ahead and cash out. So when you actually earn the money and you put it to work, let it be your greatest employee. And don't let it just be one. If I told you right now that the way that the stock market works is non-discriminatory, the 20% that you'll make in a year is the same 20% that's afforded to Warren Buffett or any other hedge fund. The difference is how many dollars do you have growing by 20%. And the ability that we have now in technology allows us to actually have information and access that previously was limited to those who had much higher thresholds in terms of investment minimums. So if you wanted a hedge fund strategy, you had to have $250,000 or $2 million or $2.5 million. And the reason why I invested in Titan is because they took that concentrated hedge fund strategy and you can start with $500. And what's the difference between a concentrated hedge fund strategy and a long-term diversified index fund strategy? Well, it's pretty simple. The concentration is what provides the outsized returns. The concentration is what provides the alpha. The wealthiest people in the world, if you look at the headlines most recently, there's been much that's been written about the Jeff Bezos, the Elon Musk, the Mark Zuckerbergs of the world. And what you'll realize when you look at their stories, their wealth is really tied up in a concentrated vehicle because the stock of their own company is what drives the growth of their wealth year over year. So I would say 2 takeaways from that. Number 1, if you have the tolerance, it's okay to be concentrated in your investments. Diversify across many different asset classes: real estate, cryptocurrency, stocks. If you want to get a little bit of acceleration, yeah, maybe you do some derivatives, some longer term options or shorter term options. Look at alternative investing. Get into companies early, before they're public. Invest in the companies that you see your friends and family building. People be so quick to go spend their dollars at Louis Vuitton and won't spend their dollars with the new makeup or hair care or beauty business that their brothers or sisters or aunts or uncles are creating. We have that opportunity to be early shareholders, early investors. And yet when we look at the number of Black-owned or Black-founded companies in the stock market, we don't really have a lot of options. And so that means we got to invest before we're public. But that early equity, that early ownership is going to be how we actually change the narrative and change the trajectory of the wealth that we want to build. And now is the only time in history where without brick, mortar, lumber, or steel, we can build value through technology. And it can be scalable. And we can serve and deliver value to hundreds of thousands, millions, and maybe even billions of people, but we got to actually invest in one another.
Everything he's saying just sounds so familiar because we talk about when you said the concentration, to tech, to index, anybody That sound familiar? 2 Tech 2 Index. And when we interviewed Mark Cuban, I asked him what his portfolio was, and he said it was, I know Netflix for sure, Russell 2000, and I believe it was Microsoft. He had another technology company. That's it. He just had 3 positions in his portfolio. And like you said, that's something that's a major key. A lot of times we get distracted. We're trying to have 37 stocks in our portfolio. It dilutes your holdings, and you're not really going to be able to, figure out what's going on. You're going to be doing research on all of these different areas, and it's like you think that by having that many, you're actually helping it, but you're actually hurting your portfolio most of the time. And like you said, most hedge funds, it's more of a concentrated thing. So that's why when we suggest 2 Tech, it's not to just keep it basic, but it's actually a more sophisticated way of investing than having 37 companies that you just know nothing about.
Just like you need, Ryan was just talking about, you got to do research and understand the company, understand what you're investing in. The same thing holds true for different crypto assets, right? There are different use cases and different value propositions that each one has. For instance, if you believe in the NFT space, then you may be attracted to Ethereum and you want to sort of go that way. You may do some research and find that Cardano and ADA is something that you're interested in. And so you literally have to pull back the onion, do your own research. There's so much free information out there on the Black Wall Street app and just in general across the ecosystem that allows you to understand the different use cases for different crypto assets. The thing to be careful of is when you see people trying to pump one. And that's why I believe Elon Musk and Mark Cuban have been so irresponsible around Dogecoin. And we can get into deeper of what that's about and why that is. But if people don't understand, if someone comes up to me and says, Hill, crypto is a crypto, Dogecoin is the same thing as Bitcoin, then you know that they actually haven't done their homework and done their research to understand there's a fundamental difference in the use case. And so rather than, there's so many of them, and there's so many that are actually providing real use and value. And if you believe in the value or the use that they're providing, and you think that there's a longevity to that, then lean into that space and lean in.
Don't forget to like and subscribe and tell your family and friends, and hit that notification bell to keep them and you informed.